Well, commercial banks usually peg their interest rates to a benchmark rate set by the U.S. Federal Reserve. But the rates for loans and mortgages have been climbing, even though the Fed rate remains at near zero. But are rising interest rates a boon or a bane for America's banks? Liling Tan finds out.
Interest rates charged by U.S. commercial banks have been rising for the first time in nearly 4 years, fueled by speculation that the Federal Reserve's $85 billion a month bond buying program may wind down sooner than a lot of banks hoped, ending a 4-year glut of cheap capital. The question is whether rising interest rates will help or hurt the banks. Both, it seems. The upbeat view is that as long as rising interest rates reflect growing U.S. economic activity, higher returns from other businesses, in theory, should offset losses on bond holdings.
You have to presume here that the reason why, at this point in time, right, that the reason why interest rates can go up is because the return on capital investments is going up. So if I'm a large business, I borrow money to build something on the presumption it's going to return some yield to me going forward.
This means banks will make more money because business confidence in the economy is growing. So customers are more willing to take out loans on the assumption that they'll be able to pay higher interest rates and still run profitable businesses. But there may be some downside ahead for the banks.
One thing that could happen is that there's a rush right now to book business because of rising interest rates, and then that will be correspondent with lower business in future quarters. So maybe a lot of business will be booked in the second and third quarters of this year, and then we'll see a fall off in the fourth quarter.
But higher interest rates will have less impact on global banks with large capital markets operations like Citigroup, Bank of America and JP Chase than they're likely to have on Wells Fargo, which has been hurt by low interest rates in the last 3 quarters.
Rising interest rates will help Wells Fargo in terms of those investment securities that they hold. They hold a lot of mortgage-backed securities. On the other hand, Wells Fargo, as the nation's largest home lender, will see that customers may rush now to buy homes or may just put off buying homes.
To see which way things could go, we'll have to wait for Friday when Wells Fargo joins JP Chase in reporting its second quarter earnings. Liling Tan, CCTV, New York.